Stop loss makes the Forex market the most secure market in the world. Let's assume that the exchange rate is 1.5220 and you think the rate will rise to 1.5320. If you want to gain 1,000 US dollars through a transaction of 100,000 euros, but are not prepared to take the risk of more than $200, what are you going to do? Well, you pick up the phone and call the broker and request to buy me 100,000 euros and place a stop loss order at an exchange rate of 1.5200, 20 pips below the entry rate. In other words, if the exchange rate rises, great, you've gained. If the exchange rate falls and reaches 1.5200, the transaction will be closed at the moment the exchange rate reaches a rate determined by the order, and our loss will only be $200. Thanks to the stop loss order we have placed, we can rest assured and not lose more than what we allowed ourselves to lose. There is no channel of investment in which you can set your risk with absolute certainty. Consequently, we have another important advantage in the Forex market: stop loss order. It is possible to determine the maximum risk in a transaction. We're going to learn more about this directive later. Take profit order. A take profit order is intended for a scenario in which a transaction is profitable and the changes in the exchange rate are reflecting increased profits. If a client is not interested in constantly following the transaction, but is rather interested in getting out of the market at a predetermined profit, all the client has to do is place a take profit at an exchange rate which is higher than the purchase rate, or rather, determine a monetary amount at which he or she would like to exit the transaction. For example, we've bought euros at a particular exchange rate and we placed a take profit order at 100 pips above the exchange rate of purchase. We know that in this specific transaction, we can only profit a maximum of 100 pips. These two orders do not entail any payment of commission. They can be placed at the beginning of the transaction, be changed in the course of the exchange, be moved or removed as long as they haven't been executed yet. It's important to note that there are brokers who allow you to place the order only after the transaction has been opened. On the other hand, there are brokers who allow you to place these orders at the beginning of the transaction. It's all subject to different firm policies.